guys, my name is Angie Freyman. I am an IRS enrolled agent, and today I am here to talk to you about some new tax credits that are coming up in the next year and then moving on for a few years after that. So I'm really excited to bring you this information. Basically, back in August, on August 12th, an Inflation Reduction Act of 22, or the IRA of 22, has been passed, and that meant a whole slew of different changes to the tax laws and a whole slew of different tax credits. So in general, what that included is, you've probably heard it all over the internet, but spending $80 billion on new workers and technology at the IRS. So the internet has been buzzing with all the new auditors that are going to be here to audit us. There's also the provisions of that Inflation Reduction Act include caps on insulin costs for Medicare recipients. It focuses very heavily on subsidies to combat climate change. And today I'm focusing on just a few aspects of this Inflation Reduction Act. And these are specifically things that I feel will greatly impact many of our clients, and that's information that's useful for individual tax filers for the most part. So with that, let's dive into the new credits that are coming up in the next year or so. So there's a credit for new electric vehicles. Now that's an existing credit, but it's being changed this year. Now, let's see, I have my notes here with me because there's a lot of numbers that I'm here to present to you. So let's see. So the $7,500 credit for new vehicles, electric vehicles placed in service after 2022, but before 2033. So we have 10 years of that credit. The manufacturer limits have been eliminated. That means if you've been looking for that Tesla and it's no longer offering a credit in 22, if you wait until 2023, you can get a $7,500 credit on that Tesla or any other vehicle that has electric vehicles. Now, there are limitations. So the MSRP cannot exceed $55,000 for sedans, so maybe it won't be the nicest Tesla. And also the limit is $80,000 for SUVs, trucks, and vans. So there's a limit to how much you can spend on a new electric vehicle. There's additional caps that are placed on your modified adjusted gross income. So that means that you have to meet your gross income requirements in order to get these credits. And the limits are $150,000 if you're single, $300,000 if you're married filing jointly, and it's $225,000 MAGI, or modified adjusted gross income, for heads of household. So that's kind of the summary of the credit for the new electric vehicle. Now, what's new for 2023 and beyond is a credit for used electric vehicles. And those numbers are a little bit different. So you get the lesser of $4,000 or 30% of the purchase price for the used electric vehicles. There are also caps on your MAGI, modified adjusted gross income, and those are half of the MAGI caps for the new vehicles. So you only qualify to get a credit on a used vehicle if you're single with a MAGI of $75,000 or less. For married filing jointly, that limit is $150,000, and for head of household, your income, your MAGI, cannot exceed $112,500. So it's exactly half of the limits for the new vehicles. So one thing to note is we're looking at your modified adjusted gross income for the year of purchase, or you can look at the preceding year and see if you qualify under either one of those. You must buy the vehicle for use, not for resale. You cannot be a dependent of another person in order to get this credit, so you cannot be a dependent. And another limitation for the used electric vehicles is that you cannot get the credit if you have already received a credit for used electric vehicles in the past 3 years preceding the date of this new purchase. So since this credit is good from 2023 through 2033, we have that time span to purchase a vehicle. And let's say you got one in 2023, you got a used EV, you got the credit. You can't go back in 2024 and get the credit again for another vehicle. You have to wait at least 3 years. Now, another new credit is a qualified commercial clean vehicle credit. That credit is $7,500 for vehicles that are weighing less than 14,000 pounds. So that's your typical personal use vehicle. Or you can get up to $40,000 credit for vehicles weighing over 14,000 pounds, but there are limitations. So it's not a straight up 40,000. What you're getting, if you have a qualified commercial clean vehicle, is the lesser of 15% of the vehicle basis if it's also powered by gasoline or diesel, or 30% of the vehicle basis if it's not powered by gas or diesel. So we're looking at your commercial clean fuel vehicle, and we're looking at, is it powered by gas or diesel as well, or is it just electric? And it's 15% or 30% of that cost, or the smaller of, right? So we're looking at that amount, 15 or 30%, or the incremental cost of the vehicle over the cost of a comparable vehicle powered solely by gas. So we're looking at, let's say, here's this truck I'm purchasing, commercial vehicle, right? And this one has it's a hybrid that uses both electric and gas, for example, and we're comparing it to the same similar class vehicle that's gasoline only. What's the price difference? So how much more are you paying? What's the incremental cost for getting this vehicle as, the electric one? And so we're looking at 15% of the basis or 30% or that additional cost, whatever's the smaller, and it's also capped at 40,000. And it must be acquired again for use or lease by the taxpayer, not for resale. So this is only for actual final end consumer. All right, so that's the vehicle credit. Now, there also are a lot of provisions for the clean energy use. And we've had those in effect for a number of years. We still have some clean energy tax credit currently, but the Inflation Reduction Act extends and expands on the existing energy-related tax credits, and it adds several new tax credits related to clean energy, manufacturing, fuel, and vehicles. So let's see, the domestic production and sale of components used in wind, solar, fuel cell, hydropower, waste energy, and other clean energy projects is covered, as well as individual clean energy incentives. So including energy rebates and consumer tax credits for energy efficient homes and vehicles. Now, so this new tax act increases credits for a tax year to 30% of the sum of amount paid or incurred for qualified energy efficiency improvements installed, and amounts paid or incurred by the taxpayer for the qualified residential property expenditures, and the amounts paid or incurred for home energy audits. So we're taking 30% of all of those amounts, and there's going to be, I'll go over in a minute, different caps put on those as well. But basically, you're looking at 30% of both energy efficiency improvements, qualified residential property expenditures, and home audits for energy. So the credit for any taxable year for those, for all of them together, is capped at $1,200. But then there's also individual caps. So the qualified energy property credit is capped at $600. Windows and skylights is capped at $600. Doors credit is capped at $250 for an external door, and $500 for if you're changing multiple doors. So we have that as well. Now separately, there's a heat pump water heaters, biomass stoves, and boilers, and those have a maximum credit of $2,000. The home energy audit credit is capped at $150, and that one specifically requires substantiation with your tax return. So you would actually need to include proof that you made that payment and attach that to your tax filing. So those are the requirements, and there's more requirements, but these are just the basics. So, so to be a qualified energy improvement, it must be in the US. It must be used in the taxpayer's principal residence. It must be new and must remain in use for at least 5 years in order to qualify. The windows, doors must have the must meet the Energy Star requirements. These provisions also apply to manufactured homes. And in addition to these credits, there's also a new energy efficient home credit. So that's for new homes that are being built by your contractors. And those credits, depending on what they are, what kind of home, if it's a multi-family dwelling or if it's a single family dwelling, and what kind of energy efficiencies are included, you get a credit of $500, $1,000, $2,500, or $5,000. So these are pretty significant for new home construction of energy efficient homes. Now, the quality, just to explain a little bit the qualified property this applies to, is basically energy property of the highest efficiency tiers, and there's all specifications for what that is, but basically anything that you're putting in place has to be very energy efficient, and it should be electric or natural gas heat pump, water heaters, electric and natural gas heat pumps, central air conditioner units, natural gas, propane or oil water heaters, natural gas, propane or oil hot water boilers, biomass stoves or boilers, oil furnace, hot water boiler, and also, and this one will apply to many, the electrical connections that are installed in conjunction with the qualified energy efficiency improvements. So putting in that special electrical power outlet for your new electric vehicle will also be covered by the credit. And that's basically just a very quick review of all the new different energy efficient tax credits that are coming into view in 2023 and beyond. So be on the lookout for these new credits, and definitely contact your accountant and let them know if you have instituted any of these. So make sure that these are included as credits on your 2023 tax return and beyond. Hope you found this helpful. If you like this, please give us a thumbs up, subscribe to our channel. We love to have our clients follow us, so please do that. And we'll see you in the next edition of this podcast. Thank you. Take care.